Good morning and welcome to the OPG Power Ventures PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Avantika Gupta, CEO. Good morning to you.
Morning, everyone. OPG develops and maintains power plants in India. We currently have a coal-based capacity of 414 megawatts in Tamil Nadu, Chennai, and a 31% equity interest in a 62 megawatt solar power plant spread across 4 different sites in Karnataka. As such, OPG is an integral part of India's energy story. India today, as most of you know, is the most populous nation in the world, home to about 1.42 billion people, all with rising energy needs. We have the 5th largest economy and the fastest growing economy in the world. Conservatively, our growth rate is expected to be around about 6.5% in the next year. In line with the growth in the economy, India's electricity demand has also historically grown along with the GDP growth rate. However, for the first time in financial year 23 and in the first half of this year, the electricity demand has outstripped the GDP growth, and we have seen an increase of about 10% in the last year and a half. India fully expects that coal generation will continue to be a key component of India's energy mix. Even as early as last week, India has re-stressed this in the COP28 held in Dubai, and we have specifically mentioned that we expect coal to play a predominant role in our energy supplies well up to 2040. India's grid today stands with an installed capacity of about 450 gigawatt, of which the peak generation which has been achieved is about 230 gigawatt. If we are to compare this to the size of UK's grid, stands at an installed capacity of about 101 gigawatt today and a peak capacity of 61 gigawatt. So that's about 4 times the size of UK's grid. In this grid today, while the installed capacity, coal power generation accounts for only about 56%, but in the actual consumption, it accounts for about 73% of the yearly consumption. This trend is expected to continue well up to 2040. Even if we expect India's energy demand to grow only about 6% per annum, which is in line with the GDP growth and not the 10% seen in the last year, India would require an addition annually for the next 5 years of about 20 gigawatt of actual generation capacity, which, if translated at today's energy mix ratio, comes to about 50 gigawatt of actual installed capacity to be added year on year. That's about half the size of the UK's grid to be added every year just to meet a 6% growth rate in the economy. These levels are conservative because if you look at the per capita consumption of India, even though the total grid size we are the 3rd largest power consumer globally, the per capita consumption is only about 1,327 kilowatt hour, and that's only about 1/3 of the global average, and it's about 4 times lesser, a little more than 4 times lesser than China's per capita consumption. The government of India fully expects that demand for power will grow at 10% per annum and will be at least 70% more in the next decade. The reasons for this are several. One is there is rapid industrialization across the country. In the last month alone, the manufacturing index grew at about 11%, which has benefited both from the global China Plus One policy as well as strong domestic demand within India. There has been a strong push from the government to do electrification across all rural areas, leading to increase in consumption across the board. There is increase in digital penetration from in all spheres of life, from banking to infrastructure. There is a change in lifestyle amongst the Indian consumers, and the last couple of years data shows that there is a large part of electricity demand growth has resulted from increased penetration and sales of air conditioners and refrigerators. So all of this, along with the push towards electric mobility and increased infrastructure requirements, make the demand story for the Indian energy sector very clear. Now, handing over to Ajit Pratap Singh, our CFO, to go through this year's highlights.
Thank you, Avantika. So OPG has been working on a robust business model. In terms of capacity, we have tied up around 20% capacity under long-term PPA, where we get a fixed tariff despite the offtake, and that fixed amount is also sufficient to meet out our fixed expenses. Balance 80% of the capacity is dedicated to merchant, energy exchange, short-term or group captive customers. The flexibility is available with the company to supply to either of these based on the tariffs. A very dynamic sales model we operate. We are not dependent only on one or two customers. Rather, we have flexibility to supply to a variety of customers for a different tenor. In terms of O&M, we have strong in-house O&M capabilities to manage flexible operations and also to use various grades of coal as well as various origins of coal. We have used Indonesian coal, Australian coal, South African coal, Russian coal, as well as domestic coal, ranging from 3000 GCV up to 4800 GCV. So that gives us flexibility to operate, and we take the procurement decision for coal based on the lowest cost per unit in terms of generation. We also do sometimes coal trading, which it contributes to additional margins for the company. In terms of international coal price, if you see, that has started stabilizing. December to November 2022 has an average of 83.6, which got reduced to 66.1 during December to November 2023, which is a substantial reduction in the coal tariff. Last published index was 58.4, and general consensus as of now is that the same coal price will continue for some more time. 6-year average of index was 53.3, which is close to the current coal index. Taking to operational highlights for H1 FY24, we have achieved a generation of 1.16 billion units as against 0.49 billion units the same period last year. That shows an increase of 139%. Our average tariff realization was 7.2 pence as against 9.56 pence in the same period last year. That's a reduction of 25%, basically because of softening of the international coal prices. In terms of revenue, we have done 69.9 million in first half as against 27 million in the last year first half, which shows an increase of 158%. In terms of EBITDA, we did an EBITDA of 7.8 million in the current year first half as against 6.9 million in the last year first half, with an increase of 13%. Profit before tax has been 4.1 million as against 0.7 million in the last year first half. That shows a substantial increase of 460%. So flexible sales mix of the company allowed us for increasing volumes, which has resulted in increase of revenue as well as profitability. In terms of operational updates, as we stated, India's power consumption has grown substantially. In the current year, from April into October, the total power consumption was 984 billion units, which is 9.4% more than the same period last year. primarily due to improvement in economic activities as well as weather conditions, improvement in household lifestyle. The company has done a short-term contract with the state utility for the current year second half. We have repaid 19.6 million non-convertible debentures in first half of the current year, partly by a refinancing and partly by our internal accruals. Last published ICI 4 index was 58.4 as compared to 73.5 as on 31st March 2023. So that shows a substantial reduction in coal price. And company continues to explore short-term as well as medium-term contracts with various state utilities as well as captive consumers. We have achieved a historical highest PLF in October 2023 at 90.83%. As a company, we also keep exploring for more Indian coal, which is the cheapest option available as of now, although supply is limited, and we are participating in all of the auctions being conducted for Indian coal. To replace part of the coal, we have started a pilot project for bamboo, which could replace potentially some portion of coal which we consume. If successful, we'll expand that further, this bamboo cultivation, which has 4 advantages. Specifically, it gives carbon offset during cultivation, carbon offset during uses of coal, and it also reduces our coal cost per unit and gives a captive and assured supply for fuel. So these 4 advantages from the bamboo. During first half of the current financial year, we did a PLF of 64%, which is substantially high compared to last year. Tariff reduced marginally because of reduction in coal prices. On account of softened coal prices, companies achieved 138% higher than last year generation in first half of the current year. If you see current year generation, that is 76% of the last full year generation, what we did in first half. Financial year 23 full year revenue was 58.7 million, and in the current year, in 6 months, we have achieved 69.9 million revenue. So, in terms of revenue, we have surpassed full year revenue of FY23 in first half itself. Our EBITDA for first half was 7.8 million as against 16.1 million of the last full year. And last full year EBITDA also has some one-off income from coal sales as well as insurance claims. So we have come out well from the disruption caused by COVID, and after that Russia-Ukraine conflict. We have, as against loss of 1.2 million in the same period last year, we did a profit of 2.4 million in first half of the current year. So this period has been a turnaround period for OPG. As per our stated objective, we continue to reduce our debt. Our gross debt has been reduced from 93 million in 2018 to 25 million in September 2023. We had a net cash of 14.4 million as of 30th September 2023, which is being retained on account of payment due for coal liabilities. And also this position will change in the second half due to change in the contracted receivable cycle, which will get elongated.
On the company's sustainability initiatives, we have published our third ever ESG report last month in October, and this is available on the website separately. We are in line with the UN Sustainable Development Goals, and we ensure that our plants continue to use best-in-class technology to reduce emissions. In order to minimize the impact on our surrounding environment, we have several unique features on our site, including we use air-cooled condensing systems which use about 99% lesser water than conventional water-cooled systems for coal-based plants. We have developed a green belt inside our facility comprising almost 36.9% of our premises. We ensure that we improve our technology continuously to achieve high levels of efficiency, as well as to reduce our internal energy consumption as much as possible in order to use lesser coal. We are exploring at the moment, as Ajit mentioned, bamboo as a replacement fuel. This project is at the moment in a pilot stage, and if successful, will allow us a dual carbon offset, uh, largely because this is an engineered bamboo, which, when grown, takes double the amount of carbon dioxide from the atmosphere as conventional bamboo. So we would qualify for carbon offset there. And further, when the bamboo is utilized for burning as a replacement for coal, it would again lead to a carbon dioxide benefit. Further, our diversified sales mix supports supply of power to a variety of customers, including several medium and small scale industries, which thereby supports employment and contributes to India's alignment with the UN SDG framework. We are also conscious of the company's impact on our neighboring communities and continue to promote and support these communities through a variety of initiatives, including restoration of lakes and groundwater bodies, development of a microforest, providing essential support for education, and much needed relief work during natural disasters. In conclusion, OPG is well positioned today to provide returns to our shareholders with its strong asset base, diversified consumer base, strong EBITDA margins, and low gearing ratio. The company today is amongst the least geared companies in India in this sector. The Indian electricity sector and the Indian economy are poised for a period of steady growth, and we fully expect that OPG will be a part of this story. In this background, the company expects to maintain its strong EBITDA and profitability margins in the coming years. To summarize, to prepare ourselves for the years ahead, the company's priorities remain maximizing cash flows from existing assets, ensuring maximum safety standards and environmental compliance in all our plants, and consistent repayment of debt. All of this together will enable us to return maximum shareholder value. We thank you very much for being a part of our journey, and with this, I would like to conclude this presentation. A copy of this presentation will be available on our website later today for anyone wanting to have a look at it. And now happy to answer any questions that you may have for us.
Perfect. Avantika, Ajit, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you know, we've received a number of questions throughout today's presentation, and Simon, at this point, if I could just hand over to you to chair the Q&A, that'd be great.
Thanks. I'll start with the pre-submitted questions on a first-come, first-served basis. Avantika, perhaps you could indicate your capital expenditure plans for the next 3 years or so, and are you willing to use your balance sheet to fund growth?
Simon, as the company's announced strategy has been to reduce debt and to transfer value from debt holders to equity holders, we have no confirmed large capex plans at the moment. Having said that, there are, of course, minor capex requirements in the coming years for the existing plants in order to improve efficiencies, increase load factors, and to comply with environmental norms. The company will, of course, also continue to explore new growth opportunities in India's energy transition space, provided that they are value accretive to our shareholders. And as and when any such opportunity or project gets crystallized, we will keep the shareholders informed.
Thank you. What's your view on where the price of coal is going over the next couple of years?
Well, general market consensus internationally is that the coal price should remain stable at today's current levels, which for the coal that we predominantly use is about $60 FOB, Indonesia. However, given that both India and China have increased dramatically their domestic production of coal and have opened up several new coal mines in the next few years, we expect that there will be an impact of this on the international market and coal prices should soften.
Thank you. A couple of questions actually on bamboo. Could you expand a little on your potential use of bamboo as a sustainable fuel in relation to the coal plant? In particular, what do you think is an achievable coal bamboo proportion for consumption, and what bamboo plantation acreage would be required to achieve this?
What we are exploring, Simon, at the moment is using a particular kind of engineered bamboo as a direct fuel replacement for coal, which will be more environmentally friendly, more cost effective, and of course will provide us with a captive source of raw material. This bamboo can be chipped and fired directly along with coal in various blends and will reduce our coal consumption to that extent. The calorific value of this bamboo is expected to be around 4,000 kilocals, which is almost equivalent to the primary coal that we utilize at the moment. Currently, the company's bamboo project is in pilot stage, by which we mean that we have planted about 18 acres of this bamboo only, and this pilot will be ready at the end of the next calendar year. If the pilot is successful, we anticipate that we should be able to use about 10% of our coal requirements can be replaced by this bamboo, which will, of course, be environmentally friendly and will also further insulate us against international coal price movements to that effect.
Thank you. You're seeking authority or have sought authority at the AGM to enable share repurchases. Given that you've sought this for a number of years now, do you expect to be making use of it? And could you talk about capital allocation in terms of new investments, dividends, and share buybacks?
The company annually reviews the policy on dividend and buyback, and accordingly obtain a general authorization from shareholders on buyback as an enabling resolution. We'll review our policy on buyback next year. The strategic objective of the company is to reduce debt and transfer value from debt holders to equity holders, and we feel that is a more efficient way to create value for the shareholders.
What's the remaining life expectancy of your plants?
So these thermal plants in general have an average life of about 40 to 50 years with some half-life upgrades. Our plants achieved COD at various times between 2012 to 2015. So we are looking to have an average additional life of about 35 years from these assets.
Thank you. When do you expect, on current trajectories, when do you expect that the company will be debt-free?
Based on the current repayment schedule of outstanding NCDs and term loan, the company will be debt-free from term liabilities by financial year 2027-28. The gross debt as on 30th September is only 25 million GBP, which is repayable over a period of next 5 years, and that is well within the industry norms.
Thank you. Has the board been approached regarding a potential buyout, and is this an avenue that the board has considered?
No, we have not been approached, Simon, and as at the moment there is no such plans or discussion.
Thanks, Avantika. Right, questions from the meeting. Why has the company increased debt when there are investments in mutual funds? Paying down the debt would achieve a guaranteed 10% return. Surely the mutual funds can't be providing much of a return above that hurdle. Supplementary on that is who manages the mutual funds and what returns are being achieved from them?
Mutual fund investment is to keep flexibility in managing our cash flows and also to participate in auctions for sale of electricity, even with longer receivable cycle. Mutual fund holding keeps changing from time to time with the cash flow needs of the company. And all these investments are being managed in-house with our treasury team. Investments are primarily in liquid and debt funds, and return is in the range of 5% to 8%.
Are you still considering the sale of the solar assets, or are you now planning to keep them?
We are still keeping the solar assets for sale. Even at the moment, the sale process is ongoing. We will sell these assets only when we get a fair valuation for them, and as such, if we feel that the value does not reflect the returns that the assets are yielding, then we may continue to hold it.
Okay. The government of India has intervened a number of times to compensate coal power generators because of high coal prices over the past couple of years. What's been the impact of these interventions in terms of how effective they are in increasing plant load factors at points of high demand? And how is the increased remuneration achieved? I.e., is revenue collected through tariffs in future periods rather than at the point of supply?
So the government of India's pass-through mechanism is directly linked to the cost of imported coal for a few generators who are based on India's coastline. This is calculated on a per unit of electricity supplied and is actually billed along with the invoice as part of the original PPA. So it is not collected in a future period. The impact it had on the PLF in the last 2 years was substantial as the international coal prices were significantly high. In this half year, since these prices have normalized, it has had minimal impact on the PLF.
Okay, so turning to questions that have just come in during the presentation. The presentation shows that coal prices have normalized and are now benign. Given the importance of stable coal costs for profitability, how far forward can OPG buy coal to lock in these coal prices long term?
So we continue to look for avenues to lock in coal prices. Unfortunately, Indonesian coal, which we use primarily, is available for long-term quantum contracts, but everybody links the price to the index, so there's no long-term pricing available. On Indian coal, there is long-term contracts possible, and these are done in two ways. One, the Indian government from time to time comes out with auctions in which everybody can bid. OPG participates in all of these auctions, and we have in fact secured some quantum this year as well for the next 5 years. Secondly, India has recently privatized coal mining, and we expect in the next year to 2 years there will be several private coal mines which will be functional, and we are looking to do long-term supply contracts with them as well.
Okay. There are a number of questions on, not surprisingly, on dividends. Avantika, would you like to say something about dividend policies?
The company has cash at the moment. The cash at the moment is being retained to pay for the liabilities for towards coal suppliers and for repayment of debt as per our repayment schedule. The company procures coal against Usance LCs with 6 months credit period, and as such, the cash that we received against electricity supplies during the first half would be utilized to pay for the coal consumed in the first half, but which is falling due only in the second half. In terms of returns to shareholders, the company has consistently stated our policy of reducing debt, and as such, we have reduced our gross debt from 93 million in 2018 to about 25 million in as of September 2023. Ongoing on a dividend policy, as Ajit mentioned, it is something that the board evaluates annually, and we will continue to do so and announce something at an appropriate time.
Thank you. Would you contemplate new builds or M&A as a way of stimulating growth?
Yes, if the value is right for an M&A, we would look at it. We have, in fact, looked at some in the past as well, but we have found that the value proposition wasn't what we wanted it to be. In terms of new build, we have looked at both thermal and renewable. India has had no new thermal generation which has come on board for the last 7 years, and nothing is expected this year as well.
There's been a sharp rise in generation and revenues. Do you expect that profits will follow a similar pattern?
We have given our guidance to the market. I think that would be the best way to evaluate the profitability, expected profitability for the current year.
Has anyone expressed any interest in the sale of the solar assets?
Yes, we've had in the last 2 years, we've had about 5 people who have expressed interest to buy these solar assets. As I mentioned earlier, there has been a disconnect on valuation with these purchasers, largely because they are providing, they are wanting the value at which projects which are still under development are available for, whereas these assets that we have been fully developed, have long-term contracts at favorable tariffs and have actually been operating for the last 4 years. So we believe that their value should be higher than that what is being offered by these purchasers. As I mentioned, we are still in discussion with one of them even at the moment.
Okay. Follow up on the mutual funds questions. If the mutual funds yield 5 to 8%, why not sell them and pay back the debt that costs more than 8%?
As I mentioned earlier, the mutual funds are being retained to manage the cash flows. So sometimes when the receiver cycle is high, we can manage with our investments. So these investments are like a buffer available to the company in case of any delay in receivables.
Okay. What would be the replacement cost of the assets on the balance sheet? That they're in at 172 million, or your net asset value is 172 million. If you had to build them today, what would they be worth? What would it cost?
So as of last week, the government of India has said that it will cost us about 820,000 GBP per megawatt to build new assets of this class. So we're looking at a replacement value of about 350 million GBP at that run rate.
Right, let me have a final scan for questions. And topics we haven't answered. Done buybacks, done dividends. Fair value. Are you giving any forward guidance? Have your brokers published any forecasts for the current year and for next year?
Yes, for the current year it has been published.
And it's okay. Just looking through, I think that's the end of the questions without repeating ourselves.
Perfect, Simon. Thank you very much for chairing the Q&A, and Avantika, Ajit, thank you very much for answering all those questions today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of OPG Power Ventures PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
Thank you.